Good afternoon, everyone. JK here. On today's episode of Jaguar Consumer, I'm going to be venturing down the toy aisle, specifically taking a long term view on shares of Hasbro, ticker HAS. Now, before getting into the bull case, I should point out that last week, really all of the toy companies had pretty good weeks. You didn't see that much weakness in any of the names. Specifically Funko, FNKO, that was down 0.88%. Looking at Mattel, MAT, that was up 2.77%. And then Hasbro was up 1.15%. Also, if you look at Jaguar Scan, you'll see that each of these names also has call activity still in open interest. For example, Funko, there were buyers of the May 12 and a half calls back in January. Those are still in open interest. Mattel, you saw recent buyers in both the April 20 calls as well as the July 18 calls. And then for Hasbro, some small buyers in both the April 92 and a half calls and April 100 calls. Like I said, all of this remains in open interest. Now, even though it's a longer term view for Hasbro, I should point out some near term technicals. So back in early November, stock broke out and would ultimately run up to $96 per share and then pulled back. Since that time, shares have been relatively range bound, but we can use that prior breakout as a first level of support. Remember, what was once resistance now becomes support. So that first level, looking at the chart, is going to be about $88 per share. So now that we've covered option flow and technicals, let's dive into the fundamentals. In late February, specifically February 25th, the company held an investor day where it reaffirmed its outlook that it provided during its Q4 earnings report. But the notable change was that it introduced new reporting segments. Personally for me, looking at prior earnings reports, presentations, it was a bit confusing because some of their segments weren't classified very well. You'd have things like franchise brands, partner brands, emerging brands, Hasbro Gaming, TV and film. But what they did, they consolidated down to three main segments, which it's going to start reporting in Q1. And now let's go through those. So the big one is consumer products. That's going to be 67% of total revenue. And this is going to be your core toys and games business. Now, B of A notes that over the next 5 years, by just maintaining share in categories where Hasbro currently holds a leadership position in, so action figures, outdoor gaming, and plush toys, this is going to present a $500 million revenue opportunity just by maintaining share. Now, on the flip side, how is the company going to gain share? Well, it's going to enter different categories. And the one that they called out was the preschool category. It's going to be launching a couple of products, specifically Peppa Pig and PJ Masks. These toys will launch in the fall and are expected to be $75 to $85 million in incremental revenue. But management sees $500 million of opportunity from these brands over time, with potential for more from brands that are currently in development. Separately, there were several announcements around new products for Nerf, from Monopoly, along with some new toy lines supporting upcoming theatrical and streaming releases in 2021, such as G.I. Joe, Ghostbusters, Marvel, Star Wars, and Disney Princess. And then finally, within this segment, Hasbro announced that it partnered with Merlin Entertainment to open its first Peppa Pig theme park with Legoland, Florida, starting in 2022. Now, the second segment is called Wizards of the Coast in Digital Gaming. This is 17% of total revenue. And this segment includes all revenue associated with Wizards of the Coast tabletop and digital games, specifically coming from Magic the Gathering and Dungeons and Dragons. Wizards of the Coast is well on track to doubling revenue from 2018 levels by 2023, and that's approximately halfway to the company's goal. Generated $816 million in calendar year 2020, with Magic the Gathering revenues up 23%, Dungeons and Dragons up 33%. Now, while it should be noted the tabletop or card games make up about half the segment, the presentation from management was focused squarely on digital. And they announced, some upcoming launches in 2021 as well as 2022. The most not the most notable, but the one that's upcoming is going to be Magic the Gathering Arena, and that's going to be launching on mobile devices in Q1. There's also games called Spellslingers, Magic Legends, Dark Alliance, and Baldur's Gate 3. Stiefel notes that these launches will create some near-term headwinds on margins due to your initial advertising, SD&A expenses. However, over time, this should drive robust revenues and profitability. And then finally, the last segment is called entertainment, which is also 17% of total revenue. And this segment includes Hasbro and Entertainment One. And now you have to go back to October of 2019 when Hasbro announced it was acquiring the Canadian-based Entertainment One for approximately $4 billion. And, the pipeline here is significant, especially coming out of the pandemic. Management spoke of more than 200 projects underway, with over 30 Hasbro brands in development across TV, both scripted and unscripted, as well as feature films. Some of the most notable ones include Transformers movie in the summer of 2022, G.I. Joe Snake Eyes movie in fall 2021, movie and animated series for both Magic the Gathering and D&D, as well as a My Little Pony movie and TV series. By 2022-2023, Hasbro expects 2 to 3 major motion pictures and 3 to 4 TV shows on major platforms for the Hasbro brand. And for Entertainment One, they currently have 9 movies in production, 15 movie releases scheduled, and 8 scripted series, 2 or 4 of which are ordered for 2021 delivery. And as BMO Capital in a recent note said, we anticipate a strong appetite for new content in the near term, given the slower pace of delivery during the pandemic, leaving many to watch reruns or old movies. So those were the 3 new segments or consolidated segments the company is going to be starting. They're going to start reporting in Q1. And as I said, this is definitely a longer term outlook. Not only are catalysts going to happen in 2021, but then you're also looking at 2022, 2023. So please keep that in mind. And that is going to wrap it up for me today. I hope you all enjoyed it, and I will catch you on the next one.